Good afternoon, friends. A very warm welcome to the third session of the price action trading level 1 as a part of the I3T3 mega webinar. So we are going to discuss the next building blocks of price action. So quickly read the disclaimer. As I've already told, nobody owns any of the topics. Okay, there's nothing like patent on these topics. Everybody can learn, everybody can teach, everybody can practice. All right. So only fact of the matter is see, that's why we always say that any trademarks in the pages of our training are property of the respective owners. Only we have done repackaging. We are trying to deliver a combo meal. That's it. So now we spoke about trend lines, right? We learned how to draw a trend line. Now let's look at trends. Okay. How does an uptrend look like? So price goes up and then there will be a minor SR. The price comes down, it creates a minor SR, and that is what? That is a high. Price breaks that high and goes up again and forms a low. Okay, that is again a minor SR. Price comes down and again it forms a higher high. It reacts and forms a higher low. Please concentrate well, try to understand. It forms a higher high and then it forms a higher low, and higher high and then a higher low, and finally one fine day or one fine time it forms an higher high but it ends up in a lower low. That is when we say that the uptrend is broken. Okay, so what is happening here? We have series of higher highs. Okay, every high is higher than the previous high, and we have series of higher lows. So every low is higher than the previous low, and one point of time the previous higher low would be broken, a lower low is formed, and when the lower low is formed the uptrend is trend to be broken. Are you guys happy if I draw a trend line like this? It's fair, no? Do you guys accept that the trend line is valid according to the rules of trend line? What are the rules of trend line? Rule number 1, we need two values. Rule number 2, that the second high should be greater than the first high, and rule number 3, that the second low should be higher than the first low. Only 3 simple rules which defines that you can draw a trend line. And now the trend line is also broken and the lower low is also broken. It is evident that the uptrend is broken. When an uptrend is broken, we will look for an opportunity to friends, we will look for an opportunity to short, because an uptrend is already broken. Where do we short? We short at proper zones. We don't short everywhere. We short at proper zones, and we will understand the concept of zones in the upcoming slides. Shorting in the below lower low, no way. I will never short below lower low. I will probably, if you ask me personally, I would like to short here at this point. Okay, so we will discuss about it in the upcoming discussions. How does a downtrend look like? Price went up, came down, it formed a high. Okay, and this high is a minor SR. No more discussions, friends. Very clear. So we have been talking these items. You should just enter into your thought. Next time you just see, hey, it's a one high, that's a minor, two times touch, major. You should understand that. It again reacts, forms a low, which is a minor SR again, and again it forms a lower high. It was a high before, now it's a lower high. The price pulls back and comes down further again and forms a lower high again. In the journey, it also formed a lower low. Similarly, it forms a lower high and a lower low. Finally, one fine moment, the lower high gets broken and it forms a higher high. Clear, friends? At that higher high level, we know that the downtrend is broken. I will do one thing. I can take a line. Okay, I can take a line. I can draw a trend line here. Is this correct trend line, friends? Can you guys confirm me once? The downtrend line. It is correct. Why? It has passed through three rules of trend line formation. Rule number one, there are two peaks. Rule number two, the the low of the second peak is lower than the low of the first peak, and the high of the second peak is lower than the high of the first peak. All three rules passed. And now what happened? The price not only broke the trend line, but also broke the lower high, and hence the trend line is invalid. Okay, it's invalid. So now that the downtrend line is broken, and any retracement, I will look for an opportunity to go long. Next, see what happens in a sideways market. In a sideways market, a high is formed, and suddenly a low is formed. At the same time, that high is also broken. It forms a higher high. When it formed an higher high, the low is also broken. It forms a lower low. Again, it forms a lower high. It forms a lower low. And then it formed a higher high. So like this, in a sideways market, you will not get a consistent rally of the script with multiple higher highs, and higher lows in a long term upward market. While in a downward market, you will have series of lower lows, and also lower highs. Now tell me, how can I draw my trend line? Is there any single chance to draw a trend line? Is there any one trend line possible in this whole journey, friends? There is one chance. The answer cannot be no. There are two lower lows, and two higher high and lower high. Okay. The first higher high is the starting point of the downward trend. I can draw a trend line. Perfect. That's pretty good. Perfect it is. This is a very valid trend line. This is a very valid trend line. Why? For the three obvious reasons. Okay, friends. All right. Now let's go back. Okay. Let's go back to the next slide. the zone marking process. So now we come to the next building block of price action, the zone marking process, which are the actual places of action. The zones are the places of major action with respect to price. Every zone is not a tradable zone. Friends, please mark my words. I repeat, every zone is not a tradable zone. We are not going to look to trade only these 4 zones. Remember this point. We will look for specific scenarios to trade, and we are very choosy. We are exclusively choosy. We have around 10 rules to verify. The zones are places where we actually look for high prospective trades. Zones are the levels of action. Where are the zones? All the basis locations are typical zones. And remember, we are retracement traders. We are never breakout traders. We never take a trade on breakout. We will always look for retracement of the price to the level where we want to trade. So most of the price action traders always wait for the levels to happen. All right, friends. So let me move on. The zone marking is a crucial aspect of price action trading. It's one of the most important aspects because a wrong zone marking might result in a lot of stop losses being hit. So friends, I seek your attention here. All of you focus on our conversation right now. Okay. There are two kinds of zone marking. One is called as the wick to wick marking. Another one is called as body to wick marking. Okay, and the wick to wick marking is called as an aggressive entry marking where risk is always more, while the body to marking is as conservative marking where risk is comparatively less. So let us understand what they mean. So what is this? The demand zone marking process 1. So what is that you guys see in the chart? What kind of a scenario is that? It is a DBR. It is a simple drop, base and a rally. Very nice. Okay. And then what we will do is we have the base. Friends, why base is important? Why base is an important location in the entire journey of the chart? Why we look at base as a zone? Because that is the point where market reacted. That is a point where market reversed, and hence we are more worried about the locations where markets reverse and where market turns up and market turns down. So those turning points are our action points. So what we do, we pick the wick. I hope everyone understand what a wick. We took the top of the wick of the base, and that is called as a proximal line. What is a proximal line? A proximal line is a line which is closest to the current latest price. Where is current LTP? Our current LTP is here, right? So which is the closest line? That is the closest line. The second line is called as a distal line. So the point is LTP is very close to this line first. The closest line is this. That is why this is called as a proximal line. And the second line, which is the bottom of the base, the bottom wick of the base, it is far away from the current LTP. Though hence we call it as a distal line. And this is the zone. And this kind of marking is called as wick to wick marking, because we take the top of the wick and bottom of the wick and then draw a rectangle. We will use charts to draw it, and that is called as a zone. Okay, friends, we have already clarified that we are not going to trade all RBDs and DBRs. Okay, remember that fact. We are going to trade only specific price action points that we will discuss in the subsequent slides. Okay, is wick to wick marking clear, everyone? Any questions, anybody? If there's any question, just throw me in the next 10 seconds. If I don't hear anything, I will move on. Umeshji, you have a question? Shoot it. We'll get more examples. We will do practically on the chart directly. Okay. Now let's go to the next story. Before we go on, then what will price do? Price will, from the current latest price, it will come down and it might test the particular zone and it will bounce back. And we are looking to trade these kind of scenarios. We want the price to come down and then we want to take a trade. We will only trade within this zone. And always this is the risk that we will have, and we will trade a minimum of 1, 2, 3. 1:3 risk reward. Okay. So we should mark only, there are multiple scenarios that emerge in the subsequent slides, and I will take up any questions that is emerging at the end of the session. All right, folks, let me move on to the next example. The demand zone marking process 2. So we all again know it's a DBR, drop base rally. Now instead of taking the wick to wick, we take body to wick. The body, the close of the bull candle becomes the body. What if this is the base is a red candle? What will you take? If the base candle is a red candle, will the proximal line change? No. Irrespective of whether it is a green candle or a red candle, the proximal line should never change. Okay, this is a rule book. We have always discussed that in case of a base, a close, in case of a base, the red or the green does not matter. So irrespective of the color of the base, this is how we are going to mark the proximal and distal line. So when we do such kind of a marking, if our zone is strong, what happens? Price will come, kiss the zone and bounce back. Okay, that's we got a very good question. What if base is a V shape? What if base is a V shape? Park that question. I'm not sure if I have put that as a scenario. I will definitely answer it at the end. Okay. Similarly, in case of a supply zone marking, okay, in case of a supply zone marking, what is the format? What kind of a price structure is this? It is an RBD, the rally base drop. So we take the wick. This is the wick to wick marking for supply zones. The first wick as the proximal line and the extreme top, which is the distal line. And then when price retraces back from there, if it comes into our zone, my entry play, always remember this, friends, my buy price is always the proximal line, my stop loss is always the distal line, and my target is 3 times of the length of the proximal and distal line. That's it. Okay, people are asking, well, where should we enter? So this is where you should enter. Okay, Now, in case of a body to wick marking for a supply zone, we will first mark the body of the base candle and then take the high of the base candle to mark the distal and proximal line. And once price comes into that zone, I will take a long at the short at the proximal line and with a stop loss at the distal or little above the distal line, and finally I look for a reversal. There is a fantastic question. If price does not come to the zone, what do? We do nothing. If price don't come to the zone, we do nothing. We will wait for the price to come to the zone. Okay. There are multiple scenarios. For now, we will wait for price to come to the zone. Now there are some special zone markings. What if your base candle is lower? Can you guys make out this scenario? If wick to wick is tested, what to do? Tested is what? You know, the high of the wick is broken. If the high of the wick is broken, we have hit the stop loss. We'll get out of the trade. We will discuss about tested and untested zone in the subsequent slides. Okay. Now let's get into this example. Okay. So what did we decide? We always said the base candles will form the. Okay. So going forward. Okay. Friends, we have learned both body to wick marking and wick to wick marking. All right. So I hope you guys understood why body to wick marking is conservative, because the body to wick marking is always smaller. The risk is always lesser. The wick to wick marking, the risk is always higher. Okay. So what happens is, if you continue to trade with a wick to wick marking, your risk is more because your wick is also extra, right? Okay. The wick at the second wick will always add up to your risk, but there is high chances of you getting an entry. Somebody asks, what if it doesn't come into the zone? There are many times price comes into the zone. If you mark wick to wick, if it doesn't come into the zone, if you mark body to wick, you can't help it. As a trader, I want to trade only low risk trade. So I prefer only body to wick marking, because I know if I continue to do 500,000 trades, the body to wick marking would have saved a lot of money in the long run. Even if I miss few trades, I don't care. Anyway, trades will come to me. Okay. There is a question, if the price doesn't touch the zone, our margins are blocked if the trade doesn't execute. No, margins are always blocked only when the trade is taken. Now, there is a proximal line, there is a distal line. Correct, friends? Now, let's say price comes and breaks the distal line and reflects back. What do I do? My stop loss is hit. And why did the price break the distal line? Try to understand the simple thought process. This will clarify all your doubts. There are two things. Number one, you are trying to mark a zone at the bottom and the top. Okay, the top reversal points. The price here, the base did not form the top, whereas the top was formed by the drop candle, which is the bear candle, the bear momentum candle. So we must always take the distal line as the highest high of the candles. Okay. So that is the true distal line which will protect you from stop losses. It's not that you must take only the base as the proximal and distal line. There is a request to repeat. Let me repeat once again. Friends, the whole purpose of a zone is to mark a level where price comes and reverses. Okay, and we take the proximal and distal line as the point of reversals. In all the standard scenarios, we saw that the base distal and proximal line was correct because the base high was the top. But in this case, the base high is not the top. What is the top? The high is the high of the red candle. If price has already gone to the top and reversed, when it comes back, it can always come there, no? If the price has already reached a point, when it comes back, there is every chance that it will come to the same point and react. So we should not take the distal line to be the base. The distal line is always a dynamic line. It should always be the highest high. In this kind of scenarios, the stop loss is definitely going to increase. The zones are always formed after the three structures, right? After rally based drop only we are going to mark the zone. We are not going to mark the zone before. Now, if you can always question, sir, because of this the zone length has increased, the distance between the proximal and distal line is increased. That is okay. It is better to have a high risk trade than a losing trade, right? How many times we get frustrated when stop loss hit it and the price reacts according to our expectation? Okay. Now, let's see the second one. The, the second line is again we took the base, we formed the proximal line and we form the distal line. Price goes up, breaks it and come back. Why? Because the top of the base, the high of the base is not the high of the reversal. In this particular V reversal, where is the high? The high is the high of the green candle. So that should be the distal line and not the existing distal line. Always proximal lines are fixed. Friends, remember, when it comes to proximal line, you have two options. Either take the wick or take the body. That's your choice. When it comes to distal line is a dynamic line. Why? The proximal is your entry line. Even if your proximal line is in a wrong place, it's okay, you miss the trade. But if your distal line is in a wrong place, you lose the trade. Remember the fact, missing a trade is okay, but losing a trade is bad. Okay, so theoretically the proximal line is the entry point. If you mark this zone, if price comes back, the proximal line is the line of entry, distal line is your stop loss. So you short at proximal line, you stop loss at distal line, and target is always 1:3, not the stop loss. The target is always 1:3 of the distance between the proximal and distal line. I enter here, I exit here, and this is my risk. And 3 times of this, 1, 2, 3 is my target. So I always use proximal line to be the body. Okay, I don't care if I miss a trade, friends, because in the long run I will save a lot of money on risk. That is my theory. Second, Distal line is a flexible line. The distal line should be the as far as possible. When you increase the length of distal line, it is going to increase your risk. If the risk is high, don't trade. Who is asking you to take every trade? Don't trade. Okay. Distal lines are not fractals. It depends on the journey. I do not understand that question properly. Now this is a special zone 3. Take this one. Okay. This is my proximal line. I have taken what? The base of the first candle, and I have my distal line should be the top. Why the top? Because that is a point where price reversed. When price gets in, it comes out. Friends, now understand this interesting topic. Okay, this is very, very critical. Now let's talk about the proximal line. Okay, let's take this proximal line. This is your proximal line of entry. Okay, for example, now this proximal line can also be this one. Any arguments there? Why I took that as a proximal line? I took that as a proximal line because that will help me to reduce my risk, because our entry is at proximal line. Now this is my risk now. So what max will happen? Price might come down and react from here, or price might go into this zone and react. If I miss the trade, I'm least bothered. I only crib when I lose the trade. So proximal line you can keep anywhere according to your appetite. Okay, the only problem with proximal line, you might miss the trade, but a wrong placement of the distal line is you are losing the trade, because the distal line is a line of exit, proximal line is a line of entry. Are you guys friends clear? Can I get a check from everyone? Is it complex? Okay. um, we will come to that. Gaurav, park your fake out and engulf scenarios. We will come to that. Okay. Now let's come back. Yes, this is for short, because we are looking forward to sell the price when it comes up. This is what kind of a structure is it? It is a rally based drop structure. A rally based drop structure is a bearish pattern. Now I am going to erase everything. There are many structures, friends. There are many. There are many, many, many. Okay. Now let's go to the next one. Special zone marking. Now this is the proximal line. This is the distal line. This is the answer to Arvind's question. What if a base is a V shape? This is a V shape where there is no base at all. Friends, you get it? This is a scenario where there is no base candle. Price went up, price came down. It is like this. All our examples, we said that price goes up, rally, base, drop. In this case, it is rally, drop. So here you get a zone. Where is the zone here? In the second scenario, there is no zone. But here, generally, people do two kinds of markings. The first marking is from the one which we have marked, and the second marking is between the wick to wick. People use this one People also use this one. I use both depending upon the situation. If risk is low, I use this. If risk is high, I go for this. And remember, there is no rocket science. It's your choice. You are a trader. It's your choice. Proximal line is always at the mercy of the trader. It's all your comfort. Only distal line you should be clear, because distal line is your stop loss line. You need to be very, very precise with distal line. Correct, Devanji. That's about gap. Okay, friends. Price will go and then retrace. Now, let's take a scenario like this. What happened in this case? Price went up in rally, strong momentum, no stoppage, nothing. Happily it went up, and there it played sideways, the war between the bulls and bears, and then it fell all the way down because the bears were fully under control. And then what happened? Suddenly price gap down next day, which means this is what? This is gap down, correct? Anybody who is questioning my stuff, let me know. This is gap down. Then price went again up, did time pass, the war between the bulls and bears, and finally came down. This is what the price has done so far. Okay? Correct. Malapan, that is right. Now, let's say, now we all know both are rally based drop and rally based drop. We all know it. Okay, there are zones. There are two zones. Let's assume we want to trade these zones, and we mark the proximal and distal lines of the both the zones. Now, if price is coming from here, now remember that price may react from this space. Price can always go and react from this place also. Why? The answer to the why is that is a maximum peak that price has stopped in the previous journey. These are the scenarios where you need to watch what price did before at this exact point. There are many times, the significant number of times you get like this, a zone over a zone. So you can see some people take this proximal line with the biggest distal line for entry. Some people take this proximal line. It is all individual choices. Okay, and remember friends, there is every chance that price can be like this also. It might respect your stop loss, and this first distal line can be protected, and the price might not go to the second distal line, and it is a probability. That is the most important thing. Price can always go and test whichever zone it wants. Okay, and there is one brilliant question: what if two zones overlap? Fantastic. The two zones are overlap, then your proximal and your distal line is by default the topmost line. There is no question of the another distal line. So remember this, a zone over a zone is very, very critical. Many times price comes to a zone, kisses, fake outs and goes up. Many people will have a problem with fake out, and majority of the times fake out happens because of there is a zone below a zone. Okay, and we can judge the movement based on the way in which the previous candles are formed. Friends, is this clear to everyone? Yes. Okay, when you look at the past prices, you will know that your action at the end of the day, you make analysis of the plot. How many of you remember the cinema Bahubali? In Bahubali, what happens? They framed a plot. They first discussed what they should do to attack the Kalakeya army. They had a plot. They said we have only 30,000 members, and they are like 100,000 lot size. Our lot size is only 30,000. So they said, okay, 5,000 will protect the port. The remaining 25,000 will be fighting the war. Meanwhile, 5,000 each on either side will go and attack the enemy on either side. This is the kind of plot. So similarly, price action, there will be plots. We always have to look at the previous time the price come there. What did the price do? Price remembers history. We need to see what the price did before when it came there. These kind of common sense question will help us a lot. And in in trading, common sense we need in abundance. Trading is not super complex. We need to apply the basic common sense, but most of the times, because of our aggression, our greed, our fear, we ignore the basics. Okay. Suppose we took a trade on a lower line and again price touches the upper line, which is stop loss. What to do? But upper distance line is protected. So it's your choice. That is the point. If it hits your stop loss is hit. You have taken the risk to take the trade, though there was an additional zone above. So given a chance, friends, given a chance, if somebody asks me, Ashok, what will you do in this kind of a scenario? I will take a trade here. Okay. At this, my stop loss is this only. There is no question of moving my stop loss from here. The distal line is this. This is not my distal line, but I can either play this proximal line or this proximal line. That entirely depends upon the situation. There are times what happens, there are people who do this. They take one lot here. Okay. If price breaks, they don't put a stop loss. They take the second lot here. And this will be their stop loss. If that stop loss hit, both lots they'll cut and they will take the trade. This double entry mechanism people follow. If there are double zones, people take one trade in one zone. If it reacts, they are happy. If it hits the stop loss in the second zone, they will again take second lot. And if it reacts, they are happy. Okay. In terms of intraday, what we have to do is tomorrow end of day I'll do a detailed charting on the track. What we have to do is in case of intraday, okay, it's all about reacting to the situation. What we will do is we will already mark all the zones on a monthly, daily, weekly, hourly, 15 minutes properly, and then we will wait for the price to come at those location and look for possible reversal signs. Okay, that's how we do in intraday. In intraday you cannot wait to create zones there. You need to plot all your zones and then wait for the price to come. Remember this, friends, if you are trading on a 15-minute candle, you will have a 25 extra candles in a day. Many times the price might not even come into your zone. Yes, in intraday trading, people who do intraday trading every day, you should mark all the zones and wait for price to react. Okay, and your zones should need not be just the smaller time frame zone. You should mark all the zones, your 5-minute zone, 15-minute zone, okay, 75-minute zone, daily zone, everything you should mark. Okay, in case, what about 1:3 risk reward in case of scenarios like this? In such scenarios, you have to take, suppose first trade I have take it, I have decided that if it breaks, I will take the second lot. Suppose it doesn't touch the distal line. This distal line is protected. Let's say this distal line is protected. Price came inside and comes out. I will look for 1:3 trade. Correct? Okay, now price went and hit the stop loss, for example, and it comes to the second zone. I take my trade. My overall average risk is this only, because one entry is here, one entry is here, midpoint. So this is my risk now, overall risk. Okay, my average risk is here. So here what we do is again 1:3 risk reward. Our this one will be this much. We'll wait to the same place to come roughly. Okay, In 15 minutes, we'll have around 25 candles, correct? All right. Let us move on, friends. Okay. Now, I guess we have answered all the questions. Any other questions, doubts on zone marking process, friends? I'll wait for 10 more seconds and then I'll move on. On a 5-minute trade, can we wait for hours or days for the price to reach? In a 5-minute trade, if you have marked all your daily, hourly, 15-minute candles, you will have multiple zones to trade. You will have multiple zones to trade. I will slowly take you guys into that tomorrow and mark one by one and show it for you. Whatever we studied together, we'll assemble everything tomorrow. Okay. So there is a question we have. Okay. So what happens? How do we trade this? How people want me to explain again. See, in this case, there are multiple scenarios. There are zone over a zone. People can trade this proximal zone and this distal zone and have a risk of this much. So people can trade this distal line and this line and take a risk of this much, or people can take this proximal line and this distal line. Okay, if price hits stop loss, people can take the stop loss and I can re-enter at the next proximal line which is away. Okay, or if price wants, if some people can do a split, they can take one lot in the proximal zone, okay, in the first zone, and if it breaks the first zone, come inside second zone, then take a second lot, then average it and then look for a trade. Okay, so there is a query on screeners. Definitely it's not possible to do screeners for all price action scenarios. Only specific scenarios we can create price action, and we'll discuss in the subsequent slides. Okay, so now let us talk about institutions and their pending orders. What are these pending orders and why would market react from there? So why does market make big news? And institutions always want to grab retailer money. They have the power to change the direction of market. And if any one of you think that institutions follow charts, you are wrong. Institutions always create charts. Okay, and institutions do not have a concept of entry, stop loss, target. Okay, institutions never take stop losses. Very rarely some very small institution takes stop losses. Majority of institutions shall always remain in the trade, and significant amount of time they'll enter at multiple levels, they exit at multiple levels. It is not like the way you go in your car. In your car, you go from your home to your office direct, one point pickup, one point exit. Whereas in case of a government bus, there are multiple people entering at each station and multiple people exiting at each station. That is a kind of game that institutions follow. Okay, so this is how they will mask the entries and exits. They create all kinds of confusion, so people don't know what is their plan. Okay, and they can dynamically change the course. See, every institutions cannot move the market all the time. There are some institutions which can move market at particular point of time, depends upon the liquidity, depends upon the war between two institutions. Okay, for example, we are all ants. We are all ants on the ground and an elephant is coming. Okay, and we think that elephant is our enemy. Sometimes what happens, there are two elephants fighting against each other. The amount of ruckus they have to create is much, create more damage to the ants on the ground, because two elephants are typically fighting the war. Okay, so the reason why this concept of reactions pending orders at particular levels happens is the institutions put pending limit orders and to grab assets at different levels at different point of time. For example, if I have decided as an institution to buy Nifty at 10,250 level, let's say 5,000 or 10,000 lots, I will put that order, but it will not execute. First time it will come and take 2,000 orders. Second time it will take another 2,000. Slowly my level will get consumed. Okay, so people who want to analyze intraday data, database of Viratech will not be helpful. Viratech database is more of an equity database. Okay, people looking for price action, intraday price action, you all of you should buy the data from any one of the data vendors outside. Okay, now the bull and the bear war, who has more order at the moment? Let's say there is a zone. Now every one of you know what a zone is. Friends, I hope everybody knows what a zone is. Okay, let's say this zone has around 1 lakh orders pending, 1 lakh quantity of some asset that they want to buy. Now there are sellers who comes, they are pushing the price down, and it has a 15,000 quantity order. Okay, and the order comes in, the moment it touches this zone has how much of pending orders? Almost 100,000 orders waiting. Suddenly it gives reaction immediately. Okay, and 20,000 orders get consumed because this 15,000 has to be killed. No, the 20,000 people killed all the 15,000 and the remaining people pushed the price up. Okay, and then it reacted at a particular point in the zone. Now friends, remember this point. The zone is a specific area. Price will not come and move at an exact point. It can move at any point within that so-called zone. Okay, now price reacted again. Second time 25,000 people come chasing the price down because 20 people was chasing the price up. What happened? Now 25,000 enemies came, they killed the 20,000 enemies and the 5,000 fellows came inside. When that happened, can you recollect that the price reacted with another 30,000 more? If 25,000 people coming in, I will send you more people because I have lot of pending orders. Now can you see that the price, the first time it came and kissed a particular point and went up. The second time it came further down. Please make a note of this very important point. These are the critical observations in price action. There was a low and this is a lower low. Even if it is 1 rupee lower, it makes a difference. That is the power of price action. And then what happens? Again, a bunch of sellers will bring the price down. This time 35,000 people are coming chasing down. At that time, the price further reacts, and this side 40,000 people will fight those 35,000 people out. So what happened? We had $100,000 pending, out of which 30 plus 20, 50 plus 40, 90,000 people were consumed. Now what happened? Tell me. Now the price further came down. What will happen next? You guys tell me. Tell me what happens next. The next time when a big number of people come, who are like 45,000 people, I have exhausted all my pending orders, all orders are consumed, there are only 10,000 people waiting, but these 45,000 people destroyed the 10,000 people, captured the fort and went down. And now what happened? The same zone which, so acted as a strong support now acts as a reaction. Can you guys understand the concept of how the concept work and how institutions play? And we are looking for such specific strong zones where we can take the trades. This is just an example to show how this fight, the bull and bear fight, happens. These numbers are not volume, they are just the pending orders. You guys don't have to care about the numbers. Just try to understand the concept. Okay, we are going to look at the price. The momentum candle itself will tell somebody came in. Why should we worry? Okay, there is a question. Is it possible to know the volume of pending order quantity? You guys can do that. Bloomberg charges about 5 to 6 lakhs where you can see up to 200 stop losses. Up to 200 levels bid ask you can see. NSE website shows only 5. You can see up to 200. Okay. Now, let us get into the next interesting topic, the authentic and the reaction zones. Yes, correct, Anand. Okay, those foundations of the zones. Now we all know zones. Now we need to know which are the powerful zones, which are the non-powerful zones. Okay, authentic zones are the zones which are self-created. They are incarnations. They emerge on their own. They are new. They are fresh. They are not reaction to other zones. What does that mean? Just remember, they are the most powerful zones in price action. But what is an authentic zone? Let's take an example. Price is going up. Price is going up and it has formed a lifetime high now. It's a lifetime high, not even a 52-week high. Second, price further goes up. Then again, can you guys accept that the lifetime high has changed? It has changed. Then further goes up and forms a base. Okay, and then price drops from there. Okay, now I have marked the proximal and the distal lines there, and this is a zone which has happened for the very first time. Lifetime high means that level price has never gone in the past, so which is a lifetime high. Okay, this is a very fresh supply zone ever created. Okay, this zone is a very new zone. It's a very new zone. Price had never gone there in the lifetime. It has gone for the first time. So this zone is powerful. That is an authentic zone. Go and check the Maruti authentic zone at 10,000. You will get an idea. Okay, let's take another example. The same example, life price. Okay, this time there is no lifetime high. We just have two, bull candles. Okay, price started making a base and then it started falling. Now after falling, then price created a small base and it further fell down. So what is this price structure, friends? The three red candles. It is a DBD, drop based rally. Okay, now if I mark the proximal line and the distal line, remember this is a zone which is also an authentic zone, even if it is not a lifetime high, because there is no zone on its left side. Is there a zone on its left side? No, right? It's all momentum candles, right? Is there any base candle on the left side where price stops? No. Any questions? Ask me. Gaurav Singh, it's not FTB. We have not gone to that. This is much before that, authentic zones, original zones. Do you guys understand? If price goes to a lifetime high and formed a zone, it is an authentic zone. If price forms a zone and that zone is an original zone. Okay? Okay? This can also be an authentic zone, friends. This can I am telling this is not for if this can also be an authentic zone. I am not denying this. What we need to do is I have to go back in time and check if there is any zone, okay, where there is support or rally, and if at all there is one zone, I will say this guy is not an authentic zone. In this case, this is a small zone. We all know it is an RBD. When I look back, I landed at a very strong momentum candle. There is no zone there. So this zone is not a reaction to Jenny zone. It is a original zone. Yes, I mean immediately on the left side, you go to the left of the price, always move left to the price. If at all this zone that you have marked touches any other zone, it is not an authentic zone. It is a reaction zone. That's all. Let me explain that in a subsequent slide. How to find an authentic zone? Look at this example. Friend, this is a rally base rally. Okay. This is an RBR pattern where we have a rally, we have 6 guys forming to mark a base, and we have another rally. It is an RBR. Yes or no? It is an RBR, but not a good RBR. That's all. But it is an RBR. Okay. So what I did to figure it out, I just put a straight line and I'll go back in chart on the left side. When I go back on the left side, if I find anything here, see, I don't find anything here. This is the point of the zone. There's nothing in this point. So that is an authentic zone. Okay. How to find an authentic zone? The process is very simple. Mark the zone, put a straight line within the zone, go left of the chart. If that zone touch any other zone, it is not an authentic zone. If it is not touching any zone, it is a authentic zone. Now what does it mean? What does it mean? Again, think, apply common sense, try to understand what it means. It means price, when it is going up, it stopped somewhere. Somebody troubled it, somebody disturbed it. Okay, somebody disturbed it. Okay, and then price again moved whichever way we want. That is a particular zone where fighting has happened. When you go left on the same particular price level, if you find the same fighting in the past, it is not an authentic zone. And if this fighting is happening for the first time, it is an authentic zone. In case of a lifetime high, you don't have to go left also to see. Friends, do you understand this point? In case of a lifetime high, you don't have to go left to see because you are already in lifetime high. There will not be anything on the left. But if it is not a lifetime high, you must go to the left and see how long you go, however long you want to go, how much ever data that is available. Go 1 year, 2 year, 5 years also. But understand the scenario. It's very simple. It takes little time to push the thought into your mind. In simple words, they are forts. All of you know zones are what? They are like the forts that the two dynasties are trying to capture. Wherever you see a new fort, go left side on the same line. If you see another fort, this is not a original fort, this is a duplicate fort. That's all. It's the most simplest way I can explain you. I'll just do one thing. I'll clear everything. If it's not lifetime, then the line will certainly hit at some point. If it is not lifetime high, it might not hit a zone. It can hit a momentum candle. No, why should it hit zone all the time? I will do this. I'm going to write an example now. Okay, friends. Okay, I'll go to new page. Okay, here it is. Now price is falling. In our example, you guys understood this and it came down. So this is the zone. Why? Drop, base, drop. Now I want to check if this is an authentic zone. I just put a straight line here. In the chart, just insert a straight line and I'll go on the left. When I go on the left, in this region, if there is any point of time, if there is any zone that is created, then if there is a zone, then it is not an authentic zone. That whole area should be blank. I'll write another example, another perfect example I write. Now price is coming down, base, price falls down. I'm sorry. I'll better take the pen. That would be better and it's much superior in writing. Price comes down, price fall. Now this is a zone. So this is a drop, base, drop. So okay, let's assume this is a good road. This is a proximal line. This is the distal line. Now how do I see what happens? Then I'll draw a straight line. Okay, now let's say price rally, base, rally. Now when you look back, here is a zone. But when you look back of this particular zone, if you come back in time, you see that it is not touching any zone. A zone can be above and below that zone. It cannot be at that line. Then it is an authentic zone. If price is at a lifetime high and forms a zone, it is by default an authentic zone. If it is not a lifetime high, go to the left and check if there is a zone corresponding to that zone. Remember friends, we are talking about only zone. What is a zone? Bunch of bases or a single base? If here it is a momentum candle, it is touching a momentum candle, I don't care. What is a momentum candle? Somebody, there is no fort there. There is no fighting there. It just moved up. That's it. All of you give me a yes if you have understood authentic zone. Everybody give me a yes. Superb. Now, if anybody has understood, does not understood, give me a no. Anybody? Have different zones. So does it mean you have to check for different time frames? No. Each time frame may have different zone. You are looking at that one particular zone in that particular time frame. Each time frame is unique. Okay, let me do this. Let me, instead of struggling here, we will go and do the study in AMI broker only. Okay, so let me clear everything. Okay, now so okay, now let us take an example. Okay, where is BSE futures? Okay, friends, this is a okay. Now friends, this is a zone, yes or no? This is a zone, yes or no? Okay, this is a zone because it is a drop, base, rally. Why rally? It is a strong momentum. It is a strong momentum. Okay, now what, I'll put a straight line on this zone. Now when I look back, is there a zone on the same line? Oh, I see a zone here. I see a zone here. It's a drop, 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 base, 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 rally. So this is a zone. So this zone is reaction to this zone. This zone is reaction to this zone. So this is not an authentic zone. This is not an authentic zone. If I look back, that place should not have touched any zone. I'll give you another fantastic example here. Look at this, friends. Is this a rally base rally? This one. Is this a very good rally base rally? Okay. Now put a straight line at the rally base rally. I put a straight line at the rally base rally and look back. It is touching a momentum candle and there is no zone there. There is a zone here, friends. See, rally, drop, base, 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 rally. There is a zone above it. Okay. And there is a zone, drop, base, drop. There is a zone below it. But at that line, there is no zone. A zone is what? Series of base candles or a single base candle? Do you guys understand and accept? All those people who said no, those three people, the three people who said no: Sunil Kumar, understood? It's very, very simple. So I am looking at it this way. I really delete everything, erase all drawings. Okay, now my only point of contention is this particular zone, which is my favorite zone. This is an authentic zone because when I put a straight line for this particular zone and moved back in time, I did not come across any zone here. I did not come across any zone there. If you once touch it, okay, there is a momentum, there is, this region is momentum, there is no zone there. You, even before this, if you go further left side and if you find a zone, you don't have to worry. You don't have to worry. You don't have to worry. See, there is a zone here. You don't have to worry. Okay, we will only see first time where it goes and touch. It is an authentic zone because when I look back, there is no reaction to the zone. This is not a reaction zone, it is a original zone. And friends, look at the reaction to that. Look at this one. What did price do? Can you see that? Price came down. See here, this one, it reacted royally and boomed up. That is the power of authentic zones. That is the power of authentic zones. And the distal and proximal line are these two. Which are the distal and proximal line for this particular zone I'm talking? This is the distal line and this is the sorry, proximal line. This is the distal line because it is rally base rally. So when the price, close price is here, it will come, reflect, and it has to go up. In here, stop loss would have got it, no problem. Yeah, it kissed the stop loss and went up. It kissed the stop loss and went up. Okay, no problem. But see the reaction. We can fix that stop loss problem later. No issue. It is just, it has kissed the stop loss. Yes, it has slightly kissed the stop loss. For example, look at this. Here. This one. Okay, a bit of fake out, it's okay, but that is fine, that is digestible. We have ways to fix that, that is never a problem. There's a request to speak in Hindi. I'm sorry, these are technical terms, it's very difficult to explain in Hindi. Okay, now let me clear this. Let me erase all drawings. Let me go back to delete all studies. Okay, now look at this, another beautiful example. I'll give you a beautiful example. This is the last example I take, friends. Can you guys accept that this is a drop based drop? Drop base drop. And now what is that I have to do to check if that is it is a perfect zone? And I take a straight line, I just insert it in the middle and go back, and the moment I go back I saw this fellow, this pin bar. Correct, friends? It's a pin bar. Okay, it's a pin bar, and that pin bar and that particular pin bar is also a zone. It's a zone. Correct? That particular pin bar is a zone because it is a drop base rally. Okay, it's a zone. We are not telling it's a whether a demand zone or a supply zone. It is a zone. It is a zone. It is some zone. Okay, we are not telling it's a demand zone, nor I'm telling we will take the trade. Even if it has taken a stop loss, don't worry about that part. Forget it. Understand the concept. Understand that that is not an authentic zone. That's all. Okay. Okay. Yeah. See, friends, understand, even if things are hitting stop losses, it is not something which we will be able to control. We are already concluded that we want a win rate of 40 to 50%. So definitely for 60 per 40, 50 to 60%, we'll go for a stop loss. Be ready for it psychologically. We will handle that in position sizing, risk and money management part. Okay. Don't ever think this failed, that failed. Don't worry. We have already accepted. No, we are not looking for a 90% win rate anyway. All right. Now let me come back. So what is a reaction zone? You know what a reaction zone is? Any zone which is not an authentic zone is a reaction zone. If you look back, if you find a particular zone, then that's a reaction zone. So that drop based drop which we saw in the previous example is a reaction to the another zone. This fellow, this guy, this particular Chotu zone is a reaction to this zone. The reaction to this zone. This is what? Drop base rally. This was drop base drop. Okay. See, two bases are coinciding. Okay. So that's the whole point. Now you can ask me, okay, is this an authentic zone? I don't know. I need to again go back and see. Yes, it is an authentic zone. Can you guys make out? Can you guys make out? See, fundamentally, it is a trade of reaction. Okay. So basically what happened, there was a resistance, price came down, it gapped up and went up, the price came again, kissed that point and went up. That's all. So whatever it is, let's not worry about those aspects. Remember one fact, that this particular, understand this whole point, that this is a Chotu zone of drop based drop, and this is another zone of drop based rally. Okay, This drop base drop zone is a reaction to this original zone, which is a drop base rally. And this drop base rally is an authentic zone because when I put a straight line and go back, it does not touch any zone. That is my conclusion. Okay. The pin bar is an authentic zone. Okay. The next zone is is a reaction zone. There are only two kinds of zone: authentic and reaction zones. Okay, so let me move on to the next topic of discussion, because still we have 10 slides to go. Okay, so there is a rally. Let's say it's a lifetime high. Okay, and it went further up. Okay, and then formed a base and formed price fell down. Okay, so now it is a perfect authentic zone because I already declared that it is a lifetime high scenario. So in lifetime high scenario, any zone is a authentic zone because there is no need for you to go left because it is lifetime high. Now what happens? That is the authentic zone. Okay, then price comes back and again price somehow went up and kissed that particular zone and then fell down. Now this is also a zone. Do you friends understand? That is also a zone, but that zone is a reaction to the another zone in the past, which is the authentic zone. Okay, so one request is, can you possibly plot zone automatically based on reaction in the past? Yeah, could be possible, but it requires a lot of investments and development effort. We can definitely think in those, and it is not something impossible, but it is not easy also. Clear, friends? Okay. Any questions on reaction zone? It's the simplest example I gave you. We formed an authentic zone, and second time it formed another zone, and when we checked that another zone, we went back in time and verified that it is a reaction to another first zone, and that first zone is an authentic zone, but this is, since a reaction, it is a reaction do. Now let's talk about the freshness of the zone, the tested and untested zone. The zone freshness defines the strength of the zone. Okay, so an untested zone will always have some power. The power reduces when zone gets tested. It is easy to test the freshness of a zone. Just mark a line, go ahead on time, you will find if the price has touched somewhere. If zone touched for the first time, it's called an FTB or first time back. If it is two time, it's called 2TB, it is second time back. Then if it is third time, it says 3TB, third time back. So how do we see that? Simple. Can you guys accept and agree that this is a power structure rally base rally? I will take an yellow color here because yeah. Can you guys accept this is a rally base rally? One rally, 4-5 bases. Okay. Now then price went up, came down, went up, came down, kissed that zone for the first time and bounced back. This is FTB, first time back into the zone. And again slowly it came down, kissed the zone and again went up. This is 2TB. If it comes back again into the zone, if it bounce back, we call it 3TB. And until this particular day, this is all untested, and from the first time it touched, it is a tested zone. Is this clear, friends? The difference between a fresh zone and a tested zone. Okay, so the point is, whenever a new zone is formed, if the price does not come to the fresh zone which was formed, then it is a fresh zone. Nobody has come to me yet. It's a fresh fort. It's a fort no enemy has ever attacked. And then until the first enemy attacks here, the first enemy attacks, it is an authentic zone. 1 second. So what do? We put a line. We go back in time. Okay. We have a rally base drop. This is a zone. It is not an authentic zone. It's a reaction zone. No, but only thing is this is an RBR, which is a demand zone. So I guess we can take it as an authentic zone. Okay, because this particular zone, this particular zone was engulfed by that zone, which means it's like this. It's like a flip. It's again a flip. So this zone is powerful and correct. Okay. So the point is, until the first time it comes and kisses, it is a fresh zone. Once it touches, it is a tested zone. And preferably, always traders take only first time back and second time back. Very rarely people look at 3TB. Because why? This is a bottom. Like FTB is more like a double top. 2TB is more like a triple double bottom. 2TB is more like a triple bottom. So nobody will go to the fourth TB generally. It is eventually fail. Clear, friends? It's pretty simple, no? Freshness of any zone. A zone is formed. Once it is formed, if price don't come back to it, it is a fresh zone. The first time it come back, it is a tested zone. That's called an FTB. And second time it comes, it is a 2TB. And the third time it comes back, it is a 3TB. That's all is the meaning. Now, how to test the zone? Very simple. In case of authenticity, I told you go left. In case of testing, go right. That's all, no? Where did this go formed? To test if this zone is authentic, we go left. To test if this zone is fresh, we go right. Why? When you come right only, we know where all it is tested. Simple, friends. Okay. Right. Can everyone give me a check if you can hear the audio? At least 5 people. Okay, great. Thank you. Okay? Yes. Thank you so much. So I guess we understood freshness. And the last topic of the day is multiple time frame analysis, where we must always look at the bigger picture. So why should we do multiple time frame analysis? So before that was one last question, does it work for short sale also? Sir, anything that hold good for long, hold good for short, it's all same. They are just the replica. Okay, it's all the same. So always check the higher time frame, intermediate time frame and the lower time frame. Always trade at the lower time frame level, never trade at the higher levels. Okay, investors focus on daily, weekly and monthly, which we did in GAN and investing. We went in only with daily, weekly, monthly. In case of positional traders, people use hourly, daily and weekly. I prefer 25, 75 and daily candles. Intraday traders use 5 minute, 15-minute hourly. Some guys use 15-minute hourly and daily also. It's all independent choices, but the best time frames that we believe are those time frames where completeness comes into play, which we have already discussed. Okay. Now, this is an example of a particular chart. Okay, who is this guy? This is TTK Prestige. Let's go into the system and take the same guy, TTK Prestige. How to take that? No. TTK. I need to go to the watch list. Here it is. So it was this. Is what is the chart? TTK Prestige -1 2012. Okay, I guess this was in 2012. I think this was in the F&O database. Yeah, this guy is the one which we're talking. Okay. So weekly, monthly. Okay. So what we were doing is, so let me do this. I delete all studies. Okay. So what did we do? We studied the 3 levels, no? Everyone agree? Low, high, lower low, higher high. This is a trend line. I can use this low, lower low. This cannot be taken. Okay. So what I will do is I'll better use the system related levels. So what I'll do is I'll take this low and mark this. This is the proper trend line for this. Okay. This is a proper trend line. How it is proper trend line? It's because of this. This is the high. This is the low. This is the high. Is it clear, friends? That's why the trend line is valid. Okay. Clearly sticking to the rules of the game. I'll delete that. I just take that line and I'll put a trend line. So weekly trend is up. Then I'll go to daily. Okay. I found that the weekly trend is up. Then I decided to draw a trend line for this. I could have before I would have drawn this. Correct, friends? Initially, I draw a trend line like this. Now the trend line is broken. Now I revise my trend line to this. I agree. Correct, friends? Is this clear? Okay. Now people ask me, how can you draw that? It's pretty simple. It's from here. I can draw low, high, higher, high. Anybody arguments? Can few of you give me a check that it is correct? I have not cheated. Okay, Devan sir. Okay. So now, so what I'll do, I'll go to the lower time frame, which is hourly. Okay. So in hourly, okay, generally again we can draw trend lines. Okay, where it is heading. More or less, even that is upside. Okay. So let's do this. Let me first mark the zones properly. Okay. There was one question today. Okay, this is a beautiful example. There was one question today. If there is no base, what do we do? Let me write quickly that scenario. It's a very beautiful scenario. Somehow I missed that. Let's say there is a bear. Okay, there is a bear, and let's say this is a bear candle, and let's say, and then I take a box, and let's say there is a bull candle, for example. Friends, is this clear? There is no base at all. Okay, there is no base at all. So what I will do, instead of, now generally what happens, there are multiple ways of marking these levels. Okay, there's no permanent way of marking levels. There are multiple ways of marking levels. So what we can do is, one way is wick to wick, wick to wick. This is one way of marking the zone. I'll mark like this. This is one way of marking the zone. Okay, this is one way of marking the zone. Another way of marking the zone is midpoint of the body to the wick. Midpoint of the body to the wick. Now, if you ask me, Ashok, come on, how can you say that the risk is very high by doing that? Yes, risk could be low. I mean, it is left to the mercy of the trader. You decide. If it is risky, don't trade this scenario, only trade this scenario. Yes or no? I guess it was Arvind who asked me. Okay, so is it clear? So what I will do, I will come back to this point. This is what I'm going to do. Okay, this is what I'm going to do. I will take the midpoint of the zone for now. Okay, that's this much. I will take the midpoint because wick to wick also it's very small. Okay, here I can even at least mark wick to wick. I can mark wick to wick here, but here I can't mark wick to wick. It is a very small. Okay, so when we go into the lower time frame, we will get a better opportunity to mark those levels. That is correct. Okay, so I'll go into daily. Now you see that though you didn't get a zone there, though can you make out there is a beautiful zone here? Can you make out there is a beautiful zone there in the daily chart? Before there was nothing, but when you go daily, there is drop, base, rally. Here there is drop, base, rally. Sorry, here you can't do anything. Whereas in the first zone, we got a lesser zone. See, this is a 2% risk zone. This is a 5% risk zone. If I get into hourly, for example, if I get into hourly, I'll go back to that old zone. Here you go. Drop, base, rally. I got a lovely zone here. Can you make it, friends? So this is the beauty of price action, friends. When you go to price action, you'll get levels where you can happily trade. Look at this, drop, base, gap up. If I took only the base levels, this is my zone. So in case of price action levels, you can always go deeper into lower time frames, and we mark the levels to get the comparatively lower levels of trading. Okay, now what did we do? Yellow, white, let's say white. Okay, so technically what happened, this is called as a nested zone. This is a weekly zone inside a daily zone inside a hourly zone. So in a weekly zone, what was the length of the zone, the width of the zone? If you click on it, it will say 5%. If you go to the daily zone, what was the width of it? It is 2%. If I go to the lower zone, how much it is 1%. So the width of the zone became 20% from 100% when we go deeper. Okay, So now, so we found that monthly, weekly is up, daily is up, and hourly is also up. Now what we should do? We should wait for this guy, the hourly fellow, to come and support in some nested zone. Okay, because if you go deeper, you will get many other zones. See, if you look at it, in hourly also there are intermediate trend lines. If you go deeper and deeper, if you go deeper and deeper, there will be many intermediate trend lines which are taking place. So coming back, okay, so you need to study the multi time frames one by one in order to design the trade scenarios, and some of the best trade scenarios are like this. You are now, don't ask me which is your HTF. Friends, you decide which is your HTF according to your comforts. I have my own HTF which I have already told you. For price action trading, as I told, more than intraday, I love positional. Okay, in positional trading, I use these time frames which are the 25 minutes, um, the 75 minutes, and the daily. No, these are the things which I generally use as the trading level, which that is my LTF. That is my LTF. Okay, the best for everyone is you can use that 15 Pfizer 75, 17 Pfizer daily candle. That is the best combination you can have. Not because that is a holy grail, because it has a logical reasoning. Now, let's say your higher time frame is up. Your higher time frame is up. Okay, I'll take a better color here. Let's say your higher time frame is up and an intermediate time frame is up, and your lower time frame is also up. The more or less the case of TTK, all three time frame is found up. Okay, okay, so I prefer to buy in a demand zone. Any demand zone we can buy. Okay, so then we have to standard mark. We will get into the examples tomorrow and we will mark it. There's a question from Sailesh. Ashok, as a positional trader, do you wait for 600 point drop of price? In earlier example, my friend, there are 4,000 stocks. Out of 4,000 stock, I want only 100 200 trades in a year. Okay, many stocks will come, kiss and go. Okay, all that we are looking for as a positional trader is only one trade per day, so 200 trade. No, let us be rational. Okay, think about it. If I take only one trade with 200 trades per day, so what is 200 out of 4,000? 5% of the total trades. So out of 4,000 charts, definitely I'll get one or two charts every day, and I don't have to focus on 4,000 because I'm pure for F&O trader. For there are only 200 stocks, and those 200 F&O stocks, I'll definitely get one trade every day, and every year definitely each stock will give one trade. And if it is not giving, we'll go deeper. No, we'll go deeper, right? If it is not giving me trade on a daily basis, I'll go and play on a 75-minute candle. I'll go and play on a 25-minute candle. When I go on a 25-minute candle, the probability of trade happening is increased by how many times? 10 times. Why? It is 375 divided by 25. Sorry, that is almost 15 times. So I'll get 10 times more chance. So that you can adjust. As a trader, if you say, Ashok, I'm not getting trade at this time frame, you go lower time frame. You are getting excess trades on a particular time frame, just mature yours to higher time frame. So there is no rocket science here. It's all set it to your luxury. Every one of you suit up accordingly. If you're finding lot of trades happening on a particular time frame, jump one trade more. You will do filtering. Okay. In the previous example, it is just an example that I just took some chart, it appeared, I just marked it. Okay, so if that insists, we will wait. Anything is possible in market. We will talk about concepts like compression and all. Prices will come to some levels if it is doing a wrong thing. It does come. Okay, if not today, tomorrow it will come because of the day kind of price action they create. Okay, now if the price is in an uptrend and intermediate, the middle time frame is in uptrend and lower time frame is in a downtrend, okay, that is awesome. Why? It is like you are catching a missing bus. You are catching a missing bus. I'll explain you why. Okay, it's like catching a missing bus. It's something like this. Something like this. Mm, okay. Now what has happened? I'll do one thing. I'll take this marker only, pen. Okay, now price at a higher time frame is going up. Okay. Now intermediate time frame, what it is doing? Okay. So if you got an intermediate time frame, it will be like this. So it will make up and down. Okay, it's not a good way to explain you guys. Wait. It's not a good way. So let's say this is a upper time frame. Okay. On a lower time frame, what happens is the long term trend is up. Okay. Now your lower time frame, what is happening is that is also up. This is the intermediate time frame, that is also up. Now what happened? The working time frame, what is happening is it went, it does. This guy is troubling me. This guy is troubling me. I don't have enough space there, friends. I'm sorry. Okay, this is the upper trend. Yeah, I'm back. Okay. Now intermediate time frame is like this. He is here. Now there is a working time frame. The working time frame fellow is like this. Okay. And he's like he's doing all the time pass and he's like this. But your intermediate is here, long term is here, this guy is here. So what you will ideally do is when the higher time frame is up, middle time frame is low, when the lower time frame is low, you will wait for the price to come to the intermediate time frame so that you look for an opportunity upside. Okay. So many times what happens, there are many instances where upper time frame is always on an upside, lower time frame, I'll show you a couple of examples in the system. The best way is to take some good examples. Okay. So what happens is many times what happens, the lower time frame will be coming down. Let's say let's take a Nestle. Anybody who's a very bullish candle? Okay, monthly is up, weekly is up, daily is also up. Now hourly is coming down. Look at this. This is a better example. Now this is weekly, friends. Okay. This is a weekly trend. Trend is up. We all know that. Now I come daily. Okay. Now if I come to daily also, daily is also up. Okay. It has not broken the trend line. Now when I go to hourly, the price is coming down to a level. And if there is a daily zone, if there is a daily valid zone, for example, okay, let's say this is one valid zone, for example. Okay. If the price comes to this zone, we will look for a good retracement trade. Okay. Generally what happens, weekly it is up, intermediate it is up. In a daily trend, we are looking for price to come down, down, and finally test that zone and bounce back, which means we wait for the price to confirm and kiss. We saw nested zone in the previous example, no? The nesting, all zones kissing each other at the same zone, and we went deeper inside the zone and marked lower time frames. We will do like that. Okay. Fine. So let me come to this. Okay. So what we do in case 2, if the price a higher time frame is up, intermediate time frame is up. In the lower time frame, if it is coming down, buy in a demand zone nested with an intermediate time frame. Look for an intermediate time frame and take an entry there, so that your intermediate is also up, your daily will react to it, the lower time frame will react to it. In the third case is HTF is up. Okay, the HTF is up, intermediate is down, the lower time frame is up, so which is a confusion. So we wait for alignment, we don't trade them. It is confusion, it is troubling us. So basically it will be in a doldrum, you know, one time frame, multiple time, all time, three time frames show you different answers to you. First case 4 is simple, all three are down, you just have to look for a good supply zone and you can short. On a case 5, again same story, higher time frame is down, intermediate is down, but lower time frame is coming up now. So what would happen? You look for a shorting opportunity because your two upper levels are downward, which means you are not fighting the tape, you are not fighting against the bigger time frame. Okay, so on the last case is again the bad case, where the upper side, the higher time frame is downwards, the intermediate is going up and the lower time frame is down. When all three are in multiple different directions, there is a problem, we will not trade. And higher time frame and intermediate time frame are important. Can we take Nifty for the case 4 and 5? Yes, you can definitely trade Nifty, that you can do that. Okay, now let me erase everything. Okay, so which are the key points to note? So we learned so many new things in this last session. We learned about trends, we learned about authentic zone and reaction zone. Okay, we spoke about freshness, the tested and untested zones. Okay, and then we also learned the MTF, which time frame we need to trade, how we need to trade, and which are the combinations. Okay, so to summarize friends, today we started with the candlesticks, where we discussed the momentum and base candle, the ERC and NRC candles. Then we spoke about support resistance, the minor SR and the major SRs, and we went to trends, that there are three kinds, how to draw a trend line. Okay, and we also spoke about three different kinds of trend, the upward, downtrend and medium trend, I'm sorry, the sideway trend. And we spoke about the four price structures, the RBR and DBD, the RBD and DBRs. And we are now also learned what is an authentic zone and a reaction zone. And then we discussed the freshness and the tested and untested zone along with MTF. So we learned these many concepts today, and tomorrow there are a bit of enhancers which we need to focus on, and after that we will have multiple rules to enter the high probable locations from a simple price action perspective, whereas our advanced program starts from next week, where we will be discussing in detail the 5 major price action models, like the FTR, the break limit zones, the caps, the Quasimodo, and also the reaction zones and the hidden zones. Okay, yeah, okay, so let's finish the price action concepts next week and merge all the best levels of price action GAN together for the nice edge. Okay, so if you guys have any further questions, we will be more than happy to take one by one, and we will try to wind up for today because I need to go back and prepare for tomorrow. And there was a question on vendor names. There are two vendors I know, the ValueRT and Valnet, for F&O trading. Even True Data, GDFL, all are vendors. Friends, whoever you are comfortable with, go ahead. And coming to price action, you don't have to, you know, again go and do the stuffs in the, what can I say, the new platforms. If you are used to some platform, stick to it, you should be good enough. All that you need to do is whatever all the things which we plotted, the lines, the trends, the zones, if you're able to mark it, things are fine. Which intraday vendor to use? That's what value RT, True Data, and Valnet. You can pick up any one of the three. The significance, there's not much of significance for ERC and NRC candles. Basically what happens, the momentum candles are all ERCs. The problem comes only when if an ERC candle is also a base candle. When base candles are extended range, then we will have lot of problems with respect to marking our zones. Our risk increases. Yeah. So intraday setup in cash market, see, I only trade F&O, I don't trade cash market, but the rules are relevant for everything. So I guess you can go with it. I mean, I for positional trading, price action is really amazing. So intraday, though, we need to, there are some other things which we can do at an intermittent level. For intraday, you need to mark all the levels, keep it ready in advance, then so that you can trade. 75 minutes in any platform, that's your choice. Ami Broker has it. I don't know about other platforms, but you can definitely get it. It will be in the settings page. How to use Ami Broker in F&O? Simple. Buy F&O data, it will come on Ami Broker. So, so V charting data provider, I have no idea. So definitely I will not be in a position to comment. An intraday trader should not look at monthly as an HFT. It is not a good idea. An intraday trader HFT should be daily candle. That's it. Daily, hourly, or probably lower time frame further. We don't require an ERC base candle. We don't require. And base candles you should be able to detect from your eyes. I don't think you need any boring candle program. If you guys want it, I can give you the boring candle AFL program also, but we can manage to see it without it. So most of the data vendors give a backfill of intraday data for about 2 months, 2 to 3 months only. I guess that much is enough. And they will give a fill of a daily candle of good list of daily candles. F&O data is already there in installed version, but the data is there till June or July, only for learning purpose. Okay. For the edge strategy after merging everything, you thought can you give a break of 1 week? Is it advisable? So what we can do, friends, at the end the last week, what we can do is we can, once we finish the whole program, we will keep 1 week for entire the 14th or the 13-14 days, we keep it for rehearsal. We'll go deep inside the concept one by one. Okay. Yes, Devan, 180 days is much more. Okay, tomorrow's topic, or we need to discuss some of the odd enhancers of the price action family, and I will pick up one of the advanced topic, which is the break limit zone. So we will learn break limit zone and we'll start looking for trades on that, and the remaining price action zones we'll have to wait for next week. Okay. Yeah, Satish, yes, we will do that. The Nestle ITF. Okay. So Pinak Pani missed the third session. Can I get the video at the evening so that before tomorrow I can update? Okay, I'll upload. We will upload that in an hour time. Okay, maximum in couple of hours. It will take about 1 hour to allow us to download, because it will do the processing. Once the session is disconnected, I need 1 hour for that upload, and we should get it. Okay, great, folks. Hope you guys had a great day. Well, it's time to conclude for the day. I look forward to connect with you guys again tomorrow for the second session of the price action trading level 1. and you guys have a nice evening. I'll connect with every one of you tomorrow again, and let's connect tomorrow at 9:30 a.m. Okay, it's a Sunday. Relax, take your time. We'll connect at 9:30. Till then, take care. Have a nice day.